What's going on, everybody? Happy Friday. It's that time of the week. It's time for the Security Token Show. We're your hosts. I'm Herwig, and I'm joined, as always, by Kyle Sonlin. How are you this week, buddy?
Oh, yeah. I am feeling good, Herwig. It's another week of the Security Token Show. We're fresh off of the Digital Asset Summit in New York last week, so everything's rolling. We have a whole docket of news coming up and a fun guest to join for the market movements.
That we do. So with that, why don't we jump right into it? Well, it's time of that show for the market movements where we're going to talk about the hottest topics of the week, but also with a special guest contributor as always. And this week, we've got Ryan Kirkley, founder of Global Settlement, alongside Kyle here. It's great to have you both on the show. We had some fun times in New York already. Now we get to do it live here on the show.
Absolutely. Excited to be on, and thanks for having me.
Hey, Ryan.
Since we know you guys so well, I think we've got some pretty good topics lined up for today. Have some juicy commentary coming, I think. But guys, I want to start off with the fact that there's yet another multi-trillion-dollar asset manager joining the foray of yield coins, if you will, tokenizing U.S. treasuries or money market funds and equivalents. I'm talking, of course, about Fidelity. Okay, so what do you guys think about Fidelity getting in on this?
Yeah, the bull case I have for treasuries is that, the yield isn't very high, right? It's only 3-4% and maybe some change. And so the basis points matter, right, in managing that fund, because you're probably only taking a small piece of that as the issuer because of the fact that there's just not a lot of juice to squeeze there. So it does make a lot of sense to use tokenization to manage the back end of these types of processes because you're going to be able to do it cheaper, right? And so every one of those basis points could actually be a significant percentage of the management fees that you're taking as an issuer on this type of treasury product. So aside from all the other crypto native style of angles for why you might want to tokenize treasury, I think it just makes a lot of sense from a management perspective because those basis points really do matter with a product like this where there's so much competition.
And I think you'll see with the Genius Act and kind of what we're coming up with stable coins, everyone's going to be looking to tokenize their treasury funds just so it can eventually go into kind of the stable that can be viewed as currency on the bank balance sheet. It's such a game changer for really crypto adoption when you can view a blockchain asset as currency to a bank's balance sheet. And so I think this is just the logical next step for them to prepare for the coming wave of stables.
And the wave isn't exclusive to the United States. We also saw news that Bosera and Hashkey out of Hong Kong are launching their own money market fund ETFs, both for Hong Kong dollar as well as US dollars. So another interesting trend. Ryan, why don't we stay on you? What do you think about this means for other currencies worldwide as well as capital markets leveraging similar US dollar-based products, let's say, for their efficiency?
I think this may have honestly just saved the US dollar, right? We had a growing trend away from it, and now all of a sudden, all over the world, we're having dollar markets popping up that did not exist before or were highly inaccessible to retail and I would call institutional fund investors. And so this gets super exciting, I think, from just the change of the marketplace. Now, it'll be interesting to see if we see localized currency like the Hong Kong dollar. It notoriously has been a relatively strong currency, but the question is, hey, is there interest in this in the blockchain space, or do we really see kind of US dollar dominance rise in these funds? I mean, obviously Europe's done some similar, et cetera. And so I think that's what I'm looking forward to see is, do we see what's the dominant scale kind of these US funds that pop up?
Yeah, it's definitely an interesting trend from like a market cap perspective. Forex is such a huge market, and of course the US dollar leads the way, but there are so many other international currencies that get traded very, very often, and in trading pairs outside of US dollars, quite frequently in the traditional currencies market, we don't quite see that same activity across the euro stablecoins or Japanese yen stablecoins, at least from a proportion perspective that we'd see in the traditional markets. It'll be interesting to see if it goes the way of matching what we've seen in the past, or if it's kind of like the internet, where English is such a dominant portion of language on the internet versus, in spoken language, it's only a smaller portion. It'll be cool to see if the US dollar stablecoin acts as kind of the English language with respect to the internet, or if it mirrors closer that Forex style of market. I think that's definitely a trend to watch over the next couple of years, because there is going to be a point where the US dollar, from a stablecoin adoption perspective, from a treasury fund perspective, does reach this level of critical mass where it will be very difficult for other fiats to add value in the same way.
Well, that makes me want to expand on that, Kyle, and just in terms of the sheer number of products that are now coming to market. And, if we look at traditional money markets and treasuries, markets, they're obviously also enormous. But I wonder, in this world of sort of, digital finance, where, you're getting early movers like Biddle as a great example, and Benji too, but sort of, potentially having that dominance factor that, potentially looking at Biddle today, right around 2 billion, basically out of 5, a little bit more than 5 billion in total yield coins. All right. That's basically a third of the market into one product. I wonder if that's going to continue to maintain, if we see Biddle become one of the largest funds in the world in general. I think it's absolutely possible. We also saw, they just moved to Solana, so that's now on 7 chains, right? So we're not just talking about one specific use case, which is typically where we see a lot of sort of, the audience and the channels and where they're distributing these products. Now we're seeing Biddle get put into different technical ecosystems, right? Different blockchain ecosystems. Would love to hear what you guys are thinking about, Biddle's plans here in general.
Yeah, I mean, look, Herwig, we deserve a little pat on the back with respect to 3-4 years ago, where we were talking about multi-chain assets being the dominant form of a lot of these things. At the time, they were incredibly segmented to different blockchains. There was not much interoperability, and there still really isn't a lot of cross-chain interoperability, but it does come at the centralization layer. That's a lot of what Ryan and I have been trying to work on with Global Settlement, is connecting a lot of these components together. But, I think that when you look at guys like Ondo, you look at guys like the BlackRock fund, they are launching, even the Benji stuff, as we've talked about, they've launched on multiple blockchains to capture many different liquidity sources, as well as having different interoperability with application level stuff and a deeper level of access. I think it makes total sense. It's really only going to continue, from my opinion. Ryan, I'd imagine you probably agree.
I mean, I think it will continue in the short term. I hope to see one of the 5 people kind of trying to address this interoperability really solve the fact that they have to go individual launch by launch. I mean, from a pure regulatory perspective and cost perspective, we're only seeing the big asset managers be able to do this because they have to launch in every individual vertical, which I think really suppresses the ultimate growth of the industry and the democratization of the industry.
Don't rule out, Circle, right? They recently acquired Hashnote to basically have both their stablecoin dominance as well as now start to introduce their yield coin dominance. And actually, we saw an announcement that they have now signed an MOU, the very first baby steps here, to working with ICE, which, owns the New York Stock Exchange and many other exchanges, in terms of how do they use USDC here and USYC as part of their ecosystem. So that's a pretty powerful potential way to just, introduce stable coins and yield coins into an ecosystem. Any thoughts there?
Yeah, I'd imagine this comes on T0. I mean, that's the first thing that you think of, right? ICE invested in T0, the security token marketplace. So now they're offering these USDC style of products. It's all kind of aligned, I think, in this goal of having one marketplace for crypto, for tokenized securities, for stablecoin products. That's really where ICE is trying to position itself for this digital market. We'll see how that adoption goes, but it makes sense from a plumbing perspective.
Yeah. Well, what about the latest stablecoin action around Wyoming, also World Liberty Financial? Ryan, I know you got some thoughts around this stablecoin that Wyoming's pushing.
Yeah, I mean, I'm excited to see the fact that we finally have politicians excited about stables, things like that. I think I would remind all of the viewers that the U.S. is rather regulated in terms of who is allowed to issue currency. A stable coin coming out of a state gets really close to a CBDC. It gets really close to offering a counter to a federal currency. And I think there will be definitely some constitutional challenges here. That said, I love what Governor Gordon's doing. I think there's a lot of exciting stuff going on in this. I think it really opens up the space for private actors to come in. And so while I hope that this leads to a clear regulatory environment in Wyoming, I also hope that this is a private run stable at the end of the day that doesn't get into a state-run kind of treasury asset, because that just gets real dicey real fast.
Yeah, well, both of the stablecoin announcements that we have here on the docket are both kind of interesting from a blurred lines perspective, because on the other side of the spectrum, you have a private company, World Liberty, launching a stablecoin, but there's obviously really deep ties there to the executive branch and the Trump administration, which also kind of has a similar set of question marks around how this issuer is handling this stuff. And it's like, well, do we have a president launching his own currency? Like there's definitely some things there and to deal with as well. I think both sides, there's just a lot of confusion around who should be issuing these things, how they get issued. It'll be fascinating to see how it plays out.
And I mean, I think you guys both know, obviously I've spent a lot of time in Washington and familiar with a lot of the people in these stories. I think politics and crypto both have a hesitancy to announce things before there is any reason to announce something. And in all honesty, I think this is news that shouldn't move the market yet. Hey, World Liberty saying we're announcing a stable coin that has no chain, no infrastructure, no custodian, no backup on where the funds are coming from. I'm sure they will do it, but we have no answer to any of those things above. So it's hard to have a positive or negative opinion other than, hey, it's great, another person's coming into the market. Similar with Wyoming, I think there's so much unknown to it. I view this more as we've created a regulatory framework to create a sandbox that exists inside of a state environment, which is awesome. But until you see an actual action play out, I think it's both too soon to be excited and too soon to be upset about either or, right?
That's a great way to phrase it, I think, and frame the whole situation. I think I already called it on the show very early on, even before Trump took office, about World Liberty Financial, that this is all good at the end of the day in terms of opening up the markets of where we want to go, in terms of getting stablecoin clarity, in terms of getting capital markets clarity around leveraging tokenization. I think this is all coming thanks to that. So like you said, Ryan, it's amazing to see politicians excited about it. Like that's a huge change in the dynamic of this industry. Yeah, go ahead, Ryan.
A year ago, right, was in DC talking about just basic stuff like stop debanking crypto founders, give us reasonable taxes so the brokers don't have to buy, sell every single gain and report it as income, right? Like just some of the most like quit treating us like criminals. And now you go to DC and you have invites to go sit one-on-one with senators, congressmen, Treasury Sec, et cetera. And it's all because they're looking for guidance. They're looking to understand. They're looking to see what's being built. And it's a 180 in a really great way. I do think the one caution I will say is like, hey, that 180 is awesome. But until stuff is actually put into like legislation, we have a tendency to move a little too fast in this industry. And I caution that the political winds can change very quickly. And I think we need to make sure we actually get some meaningful legislation passed out of this Congress.
Let's hope that happens, because at the same time we see the political sphere hopefully being more favorable towards crypto. We also see now the banking sector making moves, right? And also we saw a win for Caitlin Long with Custodia Bank and Vantage Bank teaming up, launching AVIT, which they're claiming is a U.S. bank issued stable coin, potentially the first. So it's interesting to see, this sector just go from, 0 to 100. Obviously, there was over 200 billion in stable coins starting out the year, right? So already we had huge activity, but I think we're like literally just at the beginning. We're adding a zero to that, if not more, very, very quickly, if over the next couple of years, if things keep playing out this way, I think. Well, final thoughts I want to end on here is the SEC, guys. What do we think about the latest news? All right, we got a bit of action. We got the 4 new roundtables, to continue from the crypto task force, continue moving forward, the right conversations, the right topics to discuss here, because there's so much to boil here in this ocean of crypto. And then, of course, we're seeing more activity. Once again, another case dropped, crypto.com, walking free. Galaxy, not so much. But we did see a settlement there regarding the whole Terra Luna situation. So would love to hear your guys' thoughts on this week's SEC updates.
Yeah, I do think there's a difference, and I don't have the same level of insight that maybe Ryan does, or somebody that's deeper into this spectrum. But I definitely think there's a difference in my perspective around dropping charges versus reaching a settlement. And I'm not sure how the regulators can approach the kind of the double jeopardy thing, but certainly as a regular person, once you've been litigated on something, you can't be tried again for the same infraction, right? And perhaps it's different in the corporate sector, but I would imagine, at least from a metaphysical or theoretical perspective, it's similar in that if you have charges that are dropped, perhaps they could be opened again. Whereas if we reach a settlement, then at least we kind of agree that, like, all right, maybe harm and foul, but here's kind of the compensation we're paying for this. So I think that when I look at the Galaxy style of settlement, I see, okay, that's kind of like, that's over with. Whereas some of these dropped ones, as we've talked about, it doesn't actually create a lot of legal precedent moving forward. Ryan, have you seen a similar thing? Do you feel a similar way, or am I off?
Yeah. I mean, I think you're spot on, right? There's a 7 or 12 year timeline to bring charges against things. Now, don't get me wrong, for some of these 2016 things, yeah, you're seeing a finality to this, right? By dropping it and assuming that we're keeping a pro SEC friendly crypto environment for the next 4 years, they're probably done. But then you have the stuff from 2020, 2021, 2022, and dropping it means nothing. It means you're pausing the case. It's not gone forever. The investigators don't go away, and they can always reopen it. Some of these drops, in fact, when you read the SEC drop, they especially say if certain things are uncovered, we can reopen under certain ways. And I think almost every one of these cases has that. I think from my side, and like as we look at like building a company in this space and really having to pay attention to the regulatory, it's a shame we're not getting rulings. When the courts decide and the SEC rules, that becomes law. It becomes a thing that you can build your regulations around. And so while I'm really hopeful that these roundtables offer a lot of insight and action, I've never really seen the SEC create regulation through roundtables as much as the SEC's created regulation through courts, rulings, investigations, and charges. And so I think while crypto is certainly, we're jaded by how the SEC approached us, in the same breath as this is how the SEC approached commodities in the 70s and 80s. This is how the SEC approached a lot of the bad actors and good actors as new products have emerged. And so I do think there's a historical precedent. We just moved a lot faster into the billions than any other industry ever has. And so I'm hopeful that these roundtables can kind of replace what normally is the regulate by prosecution kind of approach that I think the SEC typically has. And I think some of these panels have some pretty exciting firms that will be involved in them. And that'll be really interesting to see how that plays out.
Well, we'll be keeping an eye on it, and hopefully we'll have you back on the show. But we do have just a few more minutes here in this segment. And since we got you, I'm going to drop one more on you just to get this interesting take, a twist on it, about DLT, okay? We saw big news from the CME group saying that they're now, going to be using the Google Cloud Universal Ledger, a DLT solution by Google, to focus on tokenization and capital markets efficiency. Okay, we're talking about as early as 2026, they say, in terms of trying to introduce some of these applications and solutions. So what's your take on DLT overall, and what do you make about this news? Google getting in the game, CME helping them. Like, this is, I think it's a market movement.
So I think it signals exactly what I think we've all been saying. Everybody, and there's a universal agreement in this, is going to get into blockchain. Everybody has to enter. But I've said this before, I'll say it again about many companies in the space. If you're a DLT, you're blockchain in name only. You're not actually bringing things on chain. You're not collateralizing the asset. You're not doing anything other than putting something on a computer program. I could put this on any computer language and throw it up on the internet, and it functionally does the same thing. And so while I'm really excited that we're seeing people move in there, I think my hottest take of the show is, like, if it's DLT, you're not actually using the blockchain.
So basically you're saying CME Group wasting its time right now, should be looking at.
I'm sure they'll get investor interest. And I'm sure, like, hey, there's capture the market. Do the things that your board members want you. Do the soft entry that isn't a high risk. By all means, it's a lot easier for us to sell to someone that's on, I mean, and some of our bigger competitors are distributed ledgers, right? It's a lot easier to convince them to move upwards once they've already accepted the idea that, like, you can safely store something in a cryptographic manner, right? And so I do think it's a win for the industry. I think that Google's offering this is also a win, but I think this also shows the gap we have in terms of education, because I think a lot of people are going to scream, hey, everyone's moving on chain. And I'm not sure this is quite that.
So a little bit of just crawl, walk, run, or be the fastest and just go use global settlement. That sounds like the takeaway here, folks. So with that, that's the market movements. Thanks for coming on the show, Ryan. Looking forward to having you again soon. We're going to keep on going with some more updates in the industry.
Pleasure.
All righty, everybody. It's time for the weekly update on the RWA Foundation, our new initiative to bring together the RWA industry, specifically on different working groups initiatives, as well as our Wally DAO. Okay, you can go read our white paper about Wally at RWAF.xyz to learn more about all that. And of course, we've been promising a lot of big announcements. Fortunately, we're a little bit behind, but not by much. You can imagine that we probably have a lot staged to bring to you at Tokenize This. But in the meantime, I do want to share more of our latest clip just to keep a little bit of the magic going for what you can expect a little taste of. And of course, to learn more about what we're working on, visit RWAF.xyz. That's all we get to see for now, folks. That's all we get to see for now. So hang in there. And again, go check out more at RWAF.xyz. Kyle, we've got a ton more RWA news to talk about.
Let's keep going through it.
Good stuff. I want to start off with WhiteRock, not BlackRock, WhiteRock, as we talked about in the past, out of Hong Kong. They've been tokenizing stocks, okay, U.S. stocks to the tune of millions, okay? And now they're announcing that they've expanded to the XRP ledger with 71 million in tokenized stocks, bonds, and commodities. So I think that's a pretty big deal because we've seen a lot of other names been bringing up the tokenized stocks and equivalents here. It's quite a trend. And WhiteRock now, I just love their name, is now here on the scene, Kyle. So what do you think about this?
Yeah, I think this is a fascinating one. both in terms of their tokenizing stocks like Apple, Nvidia, Tesla were the three that they mentioned in their blog post, as well as bonds, and then gold and silver on the commodity side. So they're definitely getting to work on a lot of the things we've seen come to market. So I think that it's great and interesting that they're on Ripple. It's I haven't seen a lot of asset tokenization directly on Ripple. So it'll be interesting to see, is this kind of the catalyst now that they have a lot of their stuff settled with the courts or dropped? I'm not sure, based on our earlier conversation, whether it was dropped or settled. But either way, there's way less regulatory burden right now on the Ripple XRP ledger. So it'll be cool to see, is this kind of the catalyst point for them?
I agree. This is a big partnership on both fronts. You know, we're talking millions in tokenization here, and for Ripple to be that primary choice, I think is a big statement. They're definitely now well on the scene. They'll be speaking at Tokenize This, of course. And moving on, we also saw DigiFT announce plans for their own tokenized fund that's going to be backed by AI tokenized stocks, they say. Okay, so it's going to be featured of a number of different big public companies that are focused heavily on AI, right? But they will also be backed underneath, I guess, also tokenized the way they're putting it, which I think is pretty revolutionary. So definitely, if you're interested in what DigiFT is planning in a similar fashion, but also via a tokenized fund. So I just love this, Kyle, because it's just fully through and through on chain from investment, perspective all the way down to the portfolio. So we believe in that too. So I love what DigiFT is doing here. And moving on, we also saw big news from Polymesh, okay, and a company called Ocree putting another $50+ million in real estate on chain. In this case, commercial real estate out of Canada, Kyle. So we actually have not heard too much about RWA activity out of Canada, the way the different jurisdictions up there are kind of regulated. It's a little trickier, but it is totally possible. And Polymesh, which I believe is also headquartered out of Canada, is of course helping lead that charge. And I think that puts them close to 100 million almost with their RE tokens partnership as well. So Polymesh starting to grow their assets on chain, or TVL as people like to say. I prefer assets on chain. So good to see on Polymesh. Big news on Particula, partnering up with Moody's, one of the big dogs, one of the big rating agencies around the world, in Particula being one of the leading rating agencies in tokenization in RWA. So this is, of course, a fantastic match, and they've announced a proof of concept, and I can only expect a lot of great services and partnerships to come out of this between Moody's in particular. We actually had a great webinar with both of them on the show here. So go check out STM TV on YouTube if you want to go look that one up. Big friends of the show as well, Particula. And StanChart, okay, StanChart and STX, they have signed an MOU for digital asset custody. This isn't surprising. This is some good financial institutional activity happening. A lot of people see this behind the scenes work, but this is the infrastructure getting built out, okay? It starts with getting custody providers in place, getting and picking and choosing a chain for infrastructure, having that tokenization engine in place, bringing all these partners together for, basically to develop a new operating system for finance, right, as we keep saying it. More friends of the show. Kyle, you have anything to say on that one?
Oh, no, I just I think you're running through a lot of great articles here, Herwig. Just before we move forward into the last couple, I really was psyched about seeing the Particula announcement with their proof of concept with Moody's, because I've talked about this many times on the show, how Morningstar has rated bond offerings higher with their blockchain tokenization components in the Fat Brands bonds, as well as some of the other offerings. And I think that a lot of this is going to be a knowledge gap thing, as well as potentially a research perspective. So Particula can help these types of rating agencies better understand how to access this data, where it is, and what it actually means. I think you're going to see higher credit rating debt offerings on chain, specifically because of the on-chain transparency. And that's going to be a fascinating driver of tokenized debt. And like that's one of my really big perspectives, is that with the blockchain, you're going to reduce that risk component from a transparency perspective, which will increase the risk that an appetite that an investor is going to have. And if you have the same exact structural debt product, but now you can get a better interest rate on it by putting it on chain, I think you're going to see a swell of on-chain tokenizations. So I think this is actually a very big type of partnership we need to see more of to grow this market.
No, totally agree. You know, that's why we actually have a great panel. We actually are featuring Tim, the CEO of Particula, at Tokenize This alongside S&P Global ratings, as well as, you know, some other key participants around, you know, this important aspect of, you know, on-chain markets. So also more real estate news, Kyle. We saw from DigiShares the long-awaited real estate exchange launch is official. Okay, it's a Polygon-based exchange, but ultimately DigiShares now has their own sort of venue where, you know, real estate tokens can go and trade. So I think this is fantastic news to sort of see more of this infrastructure get built out. Again, it's not done overnight. And there's a great webinar, and great job to Jason moderating that, going over that. So go check that out. DigiShares' new Rex platform is officially live. And over in Abu Dhabi, Kyle, Abu Dhabi Global Markets is officially collaborating with Chainlink. Okay, so ADGM is, of course, their regulator over there. And I think it's a pretty big deal for them to essentially pick a provider, one of the leading Oracle's interoperability providers, as well as many other services that Chainlink does, on tapping their expertise on tokenization frameworks. Not just a coalition, but specifically Chainlink. That's a big deal, I think, for Chainlink. And I think great, Kyle, because, of course, the more experts you have in the room about tokenization and where on-chain markets are headed, the better. So this might actually be a really smart move by the Abu Dhabi regulators here to partner up with Chainlink and develop what is much needed here in the United States, a framework for tokenized markets.
Absolutely right.
And you know, a little bit more news here, Kyle. We're going to end on the UK. Well, actually, two more pieces of news, but just quickly, UK's FCA supporting more fund tokenization and growth strategies. So just like we're seeing in the Middle East, we're also seeing the UK, you know, the regulators being proponents of fund tokenization specifically being revolutionary. And we talked about so many times on the show how this is a regulatory arbitrage opportunity. This is an opportunity for everybody outside of the United States who's trying to compete for that title of having a bigger, better, more efficient capital market can do that using this technology potentially. So I think the UK is being very smart here and trying to sort of support this. And I think that's probably what the Middle East is potentially seeing too over there on the Abu Dhabi news. And Kyle, last but not least, there is a fund out of Malta that's now on Polygon that done by Apex Group. So Apex Group's been in the news a lot of different ways. I think they were involved with Tokeny. They were involved with Invenium, many other plays across the industry. And now they're at it with a Maltese fund. And selectively, once again, Polygon being a choice provider here for the blockchain solution. So Kyle, any thoughts on this one to end off our token debrief for the week?
Yeah, I wish our headlines here had more info on what the fund actually owns. It's only logical to assume perhaps it's some sort of treasury fund, just because that does seem to be the low-hanging fruit for a lot of these different companies, and it's very low risk from an investor appetite perspective. So if you're already trying to onboard people into the tokenization digital asset component, at least you can make the diligence requirements around actually the acquisition of the assets to be lower. So we don't have a lot of info yet on what that looks like, but Malta obviously is a huge financial center for Europe and these types of products. So I think it makes sense to see Malta, diving into this space as a region, and Apex being a pretty nice provider and sponsor.
Apex is an enormous fund admin, so it's not surprising again that they're kind of getting into all this, and I'm excited to see more of that. So, Kyle, with that, that's all of the news we have this week. So that means we only have one segment left for the show. Don't go anywhere, folks. It's time for us to pick a company of the week.
Let's do it. All right, Herwig, what an amazing episode. How you feeling?
Feeling great, man. I mean, I just love seeing this industry alive and cooking. It doesn't get old. Every single week, there's something new and awesome to talk about. We're having great guests every week. And of course, Tokenize This is around the corner, so we get to hang out with everybody in person in New York. I just cannot wait. But Kyle, we still have to do one more thing this week, don't we?
That's right. We cannot forget the number one highest rated segment. Okay, ladies and gentlemen, look, there's a thing in podcasting and content creation called viewer retention, where you keep someone on for a while. Our retention actually, it declines over time because it's a long show, but then it immediately spikes back up to 100% because everyone tuned back in, particularly for the Companies of the Week segment. This is the segment where Herwig and I pick two companies that we specifically want to highlight for doing the biggest and brightest things in the industry, whether that's noteworthy, whether that's exciting, whether it's just something that we want to shout out for doing something novel in the industry. We love this segment. We've been doing it for 278 shows in a row. And obviously, you get nominated for the Company of the Year award, the most prestigious award in technology. Herwig, your winner this week is who?
Kyle, I think the YouTube analytics broke one day because it said that 101% people tuned in. It was crazy.
Wow.
So this week, my illustrious award has to go out to none other. There were a lot of good potentials this week, Kyle, but I'm going to give it out. I'm going to fanboy out a little bit and give it to World Liberty Financial. All right. I get to once to say I was right about a prediction, of course, around seeing all World Liberty get into their USD1 stablecoin action. We knew this was coming. This is a big deal because whether you like it or not, this is great. We know stablecoins are great for the industry. And of course, the deep ties to the executive branch, given the Trump relationship, is just a sign that we know. And of course, it's continuously illustrated by President Trump and his whole team, focusing on David Sachs and all, even the crypto task force over the SEC. Everybody gets credit for moving things forward. But I love seeing World Liberty also getting the game because it just further means that we're going to see stablecoin action happen. And that's a good thing for the industry, Kyle. I think that's a great thing for the industry. So in that case, World Liberty Financial, for launching your USD1 stablecoin, you're my company of the week.
I think that's a great choice. They've been doing so much in the sector. They've been so important in bringing together a lot of the industry and connecting it, making crypto cool in the eyes of regulators and politicians, which is very desperately needed. If you ask anybody that's been in the space for multiple years now, you'd know that I think everybody's been desperate for getting the ear of regulators, and World Liberty Financial has been at the center of all of that.
Yeah, no, but I think they deserve to. I think it was their first time winning on the show, Kyle. So I'm glad that they finally have made the cut. But that's my choice. There's always two every week, folks. So Kyle, let's hear it. Who do you got this week?
Well, Herwig, my winner this week is Fidelity. Fidelity Investments in particular, because of the launch of their U.S. Treasury fund. They're getting involved here. Fidelity is a $5.8 trillion asset manager, so they are no joke. They are going to be using Ethereum to do this. They're launching as what they expect is May 30th. So it's coming out here in the next couple of months. And we know Fidelity's been very active in the space. They're actually my personal favorite ETF product because they custody their own Bitcoin directly within the firm as opposed to using an outside custodian. So you are getting the most direct exposure to the actual cryptocurrency, specifically Bitcoin, that I'm familiar with. So I like Fidelity. I feel like they do it the right way. They're a privately owned company, got to be one of the largest privately owned asset managers with respect to retail public style of services. And I just am excited about this product. It's going to be called the Fidelity Treasury Digital Fund, but the ticker is FYHXX. But they are using blockchains directly as the transfer agent, which again, this is stuff that couple of years ago, you'd never have expected that these firms would be getting involved this deeply. And so, shout out to BlackRock for paving the way, but second movers are also really, really important to solidify adoption in this industry. And unlike what we talked about earlier in the market movement segment, while we may not have direct regulatory clarity on some of these things, having huge institutional products is another great way to entrench the industry in these types of offerings. So for all of those reasons and many more, Fidelity is my company of the week.
Well, Kyle, I think that's an absolutely phenomenal choice. As I like to say, no trillion-dollar asset manager is safe. If there are any out there that haven't done anything in tokenization, you better believe there's probably some announcements coming out from them this year, next year, I think, at the latest, as everybody gets into the game. So that's our show, everybody. That's, of course, another week in news. So we hope to see you again next Friday. Kyle, any closing thoughts from you? Any updates from Global Settlement?
Hey, look, we're really happy to be here. As always, shout out to the team behind the STM shows here and the Security Token Show. It's been 5+ years of doing this every week, and couldn't be happier to do it. Global settlement-wise, things are great. We are building our platform now, so if you are looking to bring in stablecoin transactional systems or tokenizing a lot of the different financial processes, or if you're doing anything in the commodity sector or banking sector, reach out to me. Let's come hang out, chat, and workshop some deals. Everything's going really, really well with us. So shout out to everybody that's been able to invest in the offering. We're excited to do that.
We appreciate everybody who watches and supports this show or listens. And of course, if you haven't already, please make sure you like and subscribe. That really helps us with the algorithm, helps us get the word out. If you get the word out yourself, we appreciate that even more. We'll go like and give you a comment as well, of course. And with that, I hope to see you in just a few weeks over in New York City at Tokenize This. Use code STM for a discount. And you can hopefully, make it out there and see us. And with that, I wish you all a wonderful weekend and happy tokenizing.